Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 17th, 2018. This is a market wrap. Markets have now closed. It's just after 4 o'clock Eastern Time, and I wanted to do a very quick follow-up to the same commodities and broad markets that I covered this morning via the 60-minute charts of the future. So this is gold. This morning I pointed out this trend line that we're watching here, and we did get a break of that trend line. I pointed out the negative divergences in place at the recent highs. We had that double top high. Mentioned we may go on to make another marginal new high. And even if we still do, if we do it soon, relatively soon, that will still be a divergent high you see here. So in other words, we have to take out the MACD, the PPO, or the RSI. We have to take out those previous highs right there to negate or undo these negative divergences. So either way, we do have a breakdown. It was fairly impulsive. You can see that big red 60-minute candle right down through the trend line. I had to take a few liberties with the trend line because we had a little limp down below. But again, this is an update to this morning's video, so watch that. I talked all about this trend line and the formations here. So there it is. We have a breakdown in gold. Let's keep an eye on that. As of now, that puts gold on a near-term sell signal. Maybe we get a kickback rally, maybe not. So we'll monitor that into tomorrow. Kickback rally would be a back test to the trend line. There's also some horizontal resistance overhead. I think I covered this level this morning. You can see a lot of reactions there, reactions from below, reactions from above. So if you are looking to get short gold futures or gold or even the miners, which tend to follow gold, you can maybe short on a back test there. Give it a stop somewhat above that trend line. I can tell you there's actually some resistance right here. That's about 1340 or so. That's what you want to see gold stay below if you did take a short today or plan to short it. Really has no business getting back above 1340 on a 60-minute closing basis. Okay, I noticed at least two members posted in the trading room this afternoon, right around the time of that breakdown in gold, going short the miners via the leveraged ETF. So here's the charts. When charting, I like to use the one time, the non-leveraged ETF, even if trading those leveraged ETFs like Nugget, Dust. So this is a 60-minute of GDX. And so if that breakdown in gold continues to play out for more downside, what I'd be looking at is a move back down. There is some support here. Let me give you a line there. I don't have it marked on this chart. There's a little support there. You see a couple reaction highs, not too far below, but I think we can get down here again, visit this 23-ish area once more. That was a support zone. That's where the first correction ended right there. So downside targets. These aren't very big targets at this time. I don't think see anything screaming in the charts that say short, short, shorted. We'd have this as an official short trade. But if you're looking for a quick trade, and remember those leverage ETFs, Dust Nugget, they're 3-time leveraged. It doesn't take much to get a nice quick profit. So 23.38. Maybe set your buy to limit order a little bit above that, buy to cover limit order, or your sell limit order. I'm sorry if you're long those. And ultimately down here at about 23, that would be targets for GDX. Could morph into something more, but at this point in time, I just can't make a strong case to hold out for anything more than a quick pullback trade. There's negative divergence. You can see the divergent high there, just like we had a divergent high there. And we also had somebody shorting JNUG or going long JNUG, the 3-time leveraged, one of the leveraged ETFs for the junior miners. So this is GDXJ, which are the junior gold miners. And nice clean chart. You see the negative divergence down here on all the indicators. PPO, RSI, 1333 histogram. We had a divergent high. Very similar, obviously, to GDX, but there's your breakdown. Big red 60-minute candle. Actually, there's two candles. So there's a 60-minute candle close below. And targets down here right above $34. 33.20, which I would have to say um, is probably what I'd call my preferred target. If I was short this one right now, that's where I'd be swinging it down to. I don't have any position in the juniors. And then possibly down here at about 32.7. Okay, next up is crude. Crude, I'm still looking for more downside. It appears to be rolling over, but a very slow roll so far. We zoom in a little bit. You can see there's the trend line going back to mid-December there. Zoom in a little bit. We broke that first trend line with a little breakdown, kickback rally, and we still haven't yet visited this other trend line. But again, I covered that this morning. Not a lot to report because we didn't have a big day here, but these are still the targets. You can see them blue around 63, 62.20-ish, and then maybe this 61.77-ish level. So that's looking for more near term, more downside in crude, and that will almost certainly spill over into the energy stocks, XLE, XOP, and XES. Here's silver futures, and remember we're sticking with a 60-minute time frame that's indicated up here. I don't have this chart marked up, at least not on this time frame very much, but you can see there's a line right here about 1693 that has acted as support right there. So that's a level. If that breaks, that will further add to the near-term bearish case for the precious metal stocks and the miners. And next up, natural gas. If you recall in the video earlier today, I pointed out this level here, about 322 was resistance. And I also said my expectation was that this time around we'd probably punch up through there, which we did today. So we got that breakout that I was looking for. And because of these divergences, I told you it's not a breakout that I'd be chasing because I think it has a higher, pretty good rate of failure or chance that it may fail. We have these divergences. We had negative divergence right here. These divergences have extended. In fact, they're continuing. They're starting to steepen now. You can see that the trend line is a little steeper than it was before. We haven't reversed yet. In other words, my book, again, this is just what I call, how I look at divergence. Right now, this is what I refer to as potential divergence because this is a momentum indicator, the MACD. It's still pointing higher. Prices are still moving up. That means that we may go on and take out these previous reaction highs. However, look for a bearish crossover, blue line down over the red line, crossing down over. That will then effectively put in a lower high, lower than this previous high, and of course lower than that high over there, thereby confirming the negative divergence. And if that happens, there's a good chance it'll happen with a failure back down below that 322-ish level. That would be a failed breakout. That's bearish because you have longs that took the breakout. They have their stops hit. They start to exit. You also have some shorts that might pile in when they see that breakout has failed. We may not plunge right away. There is some pretty decent support here. Let me give you that level. I should have that on my chart. Put a line right here, comes in about, it actually comes right in with the trend line there. That line was at, right about 314.7 or so. So watch that level, and if you're trading nat gas. Okay, and to wrap this up, we'll look at the broad markets. This is the S&P 500 futures. This is a trend line. I told you this morning I wasn't too fond, I'm not crazy about that trend line. We moved back above it, so I'm just going to leave it there. I won't extend it. This may morph into a different trend line, something along these lines. We'll just have to see. Like I always say, the charts are dynamic, and so is my analysis. But either way, we were back testing. I think that's about where I had it, and we jumped back above there. Because it wasn't a very well-defined trend line, I don't put too much into that. What I am noting is we had a divergent high right here yesterday before that sharp sell-off yesterday. Remember, we popped at the open and then they faded that rally hard, that opening gap or move up. And we've recovered nearly all of that today, almost right about to the button there, you can see. But as I mentioned here before, any new high in the S&P 500 as well as QQQ, if it occurs soon, is almost certain to be another divergent high, just an extension of these existing divergences. So we can move these lines. As you see, I have it placed a little bit above because these momentum indicators are moving up. And I'll tell you from my experience, when you get this close to challenging a high on just about any asset, you're probably going to take out that high. Once in a blue moon, you can fail just shy of it. But I don't know. Those new highs, those previous reaction highs, especially during the bull trend like this, are like magnets. You get that close, you're going to hit it, and you're probably going to take it out by a little bit. That's the history of most of the new highs that I've seen, at least for a while now. So whether we get it or not, here's the thing. We do have divergence right now because we made a roughly equal high. I think if I really zoomed in here, you can see it's slightly higher than that previous high. I don't want to split hairs. You don't have to get this nitty gritty about it, whether we were a few pennies shy or a few pennies above it, but that is negative divergence. We did make a slightly higher high. So should the S&P reverse here, we have that negative divergence in place, and should it go any higher, that divergence will extend unless we go a lot higher, and I just don't see that right now. I know it's been a heck of a run. Not telling anybody to try to position against this trend that if you're not comfortable with it, but I think a decent pullback's coming. Nice little correction, short-term trade. And here finally is the Nasdaq futures. This trend line I am a little more fond about because we have more reactions, 1, 2, 3, and then we slice down through it there. And I posted this in the trading room shortly before the close today. We were back testing that trend line. So trend lines, act as support when prices are above. They're resistance as any support level. Once broken, any support level, it then becomes resistance. And that holds true for trend lines just as well as horizontal price resistance. So let's see what happens here. If we get rejected, if we don't, maybe we pop back above that trend line just like we did on the SPY. But you can see so far the Nasdaq, Nasdaq 100 has not matched those previous reaction highs. And again, we're that close. I'd put it a little better than a coin toss odds that we go ahead and take that out. And you can see here, all I have to do is extend this divergence line. So any new high, any marginal new high, meaning, not anything that 3, 4, 5, 10% above there, but any marginal new high will be a divergent high. We'll have negative divergence in place. And that would set the stage for another pullback. And again, even if you get a little quick pullback like this, if you're trading things like NQ, even QQQ or some of the leveraged vehicles, it's good for a quick trade. Get in, make a few, a percent or two on it, 3, 4, whatever, however much you want to leverage it up, and then get out. Targets, again, I think we still come back. If we roll over here, at the very least, we're going to visit this 67.43 level again. But as I said earlier, I wouldn't be surprised if we punched right on through it because that level was already tested once. That was that reaction high over here. So I'm still favoring a move down to this 67.04, 67.05. Actually, it's closer if you look at the 0.96. So I should move that line up and we'll call it 67.05. As of now, that's my target. Again, whether we go up just a hair, the risk reward to me is still favorable for being short the NQ right now because the upside is minimal. Again, if you are going to do it, you want to stop not too far above these recent highs there, and that would be your pullback target. All right, we'll see what happens tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.